Dear students, welcome back. So today I am starting next unit under Financial Accounting 2. So the next unit name is Royalty Accounting or Accounting for Royalties. So first, before going to the practical aspect of the lesson, so we must understand what exactly royalty is all about. What is the royalty is about? We can say that royalty is a consideration received by a business entity or individuals who sells their creations to a third party for their use. See, it is very simple to understand. See, it is a consideration received by an individual or by an entity. Clear? So who sells their creations? So they will have a creativity. So for that creativity, so we are going to give a consideration against to it. Clear? So for usage of that creation, that creation is used by a third party. So that is the consideration paid against to it. Exactly, we call it as a royalty. So that means when I said a creation, so it is very clear, royalty usually paid on intangible asset, correct? Because tangible is a different and intangible is all about creativity, coming with ideas, clear? So for those ideas people will be paid. Some formulas to be identified by some people, for that some amount is to be payable, clear? Or a author writes a book, for that written copy of that book, so the author is going to get a copyright. The author is going to get a money on number of books the publisher is going to print. So that means it is very clear. So copyrights or we can say patent rights, clear? So these are all comes under royalty. Okay. So anyways, typically royalty is considered to be a synonymous with a rent, but it is not a rent. Synonymously we can call it as a rent, but however its concept and application varies completely. So application level of royalty is completely different than the rent. Okay, so you can say that although the user of assets pays consideration to the owner for using the owner's asset, both in the case of acquiring a property on rent or a book for publishing, however royalty is different from the rent paid by the user. See, it is very simple, where we must understand that in a more simplest way. So owner who collects the rents, so that cannot be exactly comparable with the royalty accounting. So wherever or where rent is paid for using tangible assets, so it might be using of a place, a store, a shop, a house, a building, or a machinery, clear? Any kind of fixed asset, any furniture if you are using, so against that we might pay a rent, clear? So but the royalty is paid for using intangible assets, clear? Royalty is exclusively payable on intangible assets or availing special rights such as patents, copyrights, mines, etc. So this complete the concept what I spoke about, it is completely speaks purely about royalties accounting, and we are going to learn some important terms which is related with royalty, and final accounts and preparation of accounting and treatment and types of royalty accounting. So those things we are going to learn, clear? So in this video we are going to understand all those things. So now I have given a brief introduction about the royalty, correct? So now let us understand what exactly the meaning of royalty accounting, or what exactly the meaning of royalty in accounting system. Clear? So royalty is nothing but a periodical payment made by the user of the assets to the owner or the creator of such an asset for its use. See, it is very simple. Royalty is nothing but a periodical payment, or it might be a consideration made by the user, one who are using it, so they are going to pay it. Clear? Of the assets to the owner or the creator of such an asset for its use. So in other words, the owner or author of the asset, such as a mine or patent or book or artistic work, etc., it may be, it may allow the third party like a licensee or publisher or one who uses that one who uses that particular formula or creativity. So they all are included in this. So what they exactly going to do? They are going to use that particular creation in exchange of a consideration. So that creativity is used in exchange with the consideration. So thus such a payment made by the user to the owner is known as a royalty. So such kind of consideration which is paid by the user to the owner is exactly, we call it as a royalty. So furthermore, the consideration paid in lieu of using the assets of the owner is determined in terms of the number of items produced or sold. So you have to understand that consideration, it cannot be, fixed just like that. So that consideration always we decide upon the number of items we produced out of it, or number of items we sold out of it, number of extraction we did out of it. Clear? So that is what exactly is royalty. That is the ultimate meaning of royalty. Clear? So I believe you have understood what exactly royalty is all about. So now let us understand the parties who are all comes or takes a major role in royalty accounting, or the parties we must know while preparing our royalty accounting. So first I am taking a lessor. Lessor is the person who creates or owns the asset and provides the right of using such an asset to the third party is known as the lessor or the landlord. Furthermore, lessor receives a consideration from the third party for using the right to use his asset. So, I believe you have understood, lessor is the owner, real owner of that particular property or that particular creation. Clear? So one who receives a royalty, one who receives a consideration against his creativity. So we can give an example for that. Lessor include the owner of the mine or quarry, author of a book, or artist in case of a music composition. So these are all the few examples which I have given. So next let us understand lessee. So who are called as a lessee or leasee also we call. So leasees are the person, or those person are the person one who uses the asset of the creator. So it is very simple. Lessor is the owner, so lessee is the user of that kind of creation. So the owner, in lieu of consideration for using such an asset, so he is going to pay a consideration to the ultimate owner. Clear? So example of lessee, so that includes a publisher. So publisher will be a best example for the lessee. Or the miners, one who takes the tender, or one who takes the land from the landlord and start mining that particular land. So they are also called as lessees. Okay. So next we have to understand the types of royalties in accounts. So what are all the major types of royalties we have in accounts? So first one I am explaining here, copyright. So what is this copyright? See, it provides the right to the author or owner of the asset like book. So copyright always, connected with book. You should remember. Clear? So that is why it is very clear. Copyright provides the right to the author or owner of asset like book, artwork, music composition, etc. to claim royalty from the publisher. So therefore the publishers pay copyright royalty to the author based on the sales made by the publishers. So it is very simple. Copyright is the consideration which paid by the publisher to the author against the number of books sold. So that is what exactly we call it as a copyright royalty. So next is patent royalty. So patent royalty is paid the user to the owner based on the number of items produced. On the basis of number of items produced, we consider over here patent royalty. So see, patent we can say usage of some combination of formulas, usage of some combination of chemicals, or we can say today the entire world is facing a COVID-19 pandemic, and everybody, every country across the globe, they are doing a lot of research to try to get the medicine. Clear? So the country which identifies the medicine first, so they will get a patent rights, or that scientist or that doctor will get a patent rights on such kind of medicines. So for each production of that kind of medicine, that particular person, one who have composed that two kinds of who have identified or come up with that kind of medicine which can fight against COVID-19, so he is going to get a consideration. So that kind we call it as a patent right. Next is mining royalty. So what exactly mining royalty? See, in case of mining royalty, the user or the lessee pays a royalty to the owner or the lessor based on the output produced. So you are doing a mining, land is mine, and I am the lessor, and you have taken my land for mining purpose, so you are the lessee. Clear? So for using my land and doing production in my land, so you are going to pay me some consideration on the basis of the production you made. So that is what exactly we call it as a mining royalty. I believe you have understood all the three types of royalty, that is copyright royalty, patent royalty, and mining royalty. So therefore, in case of a patent or a copyright, the publisher pays royalty to the author based on the number of book copies sold. In other words, the holder of the patent or copyright receives royalty based on the number of items sold by the user. So try to understand it. Here we are making a clear point. A royalty is paid on the basis of sales, on the basis of number of goods, number of items sold. So whereas in case of mining, the royalty is received by the owner of the mine based on the number of items produced by the user. Even in mining also, on the basis of production only, we are going to calculate a royalty. So now you have understood the lessor, you have understood the lessee concept. So now let us understand one more very important concept. So that is important topic, minimum rent. So what is this minimum rent? So what do you feel by hearing a word called minimum rent? What do you feel? What is minimum rent is all about? See, minimum rent, the amount which are supposed to be payable, so that is the minimum amount compulsory, whether you are producing more or whether you are producing very less. So even in such a cases, a fixed amount has to be paid by the lessee or leasee to the lessor. Clear? Lessee to the lessor. Clear? User to the owner. So user has to pay a fixed minimum amount for the usage of that particular item or that particular good or that particular creation. Clear? So that minimum amount which has to be payable, so we call that as a minimum rent. So now let us understand in more better ways. Usually the royalty agreement contains a clause for the payment of a fixed minimum amount to the lessor every year as a royalty, irrespective of the actual benefit to be taken by the lessee, simply in order to assure the lessor of a certain regular income from his property. See, lessor or the owner has given some property. Obviously, he will expect at least a minimum return he should get. Clear? So, we have one clause under royalty agreement where it clearly says even your production is less, you are supposed to pay a fixed consideration, that is called a minimum consideration which has to be paid. Okay, so the minimum amount is known as minimum rent. That fixed minimum amount, whatever is fixed, compulsory, which has to be payable, so that exactly we call it as a minimum rent. Or we can say deed rent also. Minimum rent and deed rent is also same. Both are same, so you should not get confused while reading deed rent or minimum rent, because it comes under the clause in the agreement. So it is there in a clause under the deed. So that is why we call that also a deed rent also. Okay. So it is to be remembered that the minimum rent may or may not vary in different years. So it may vary or it may not vary in different years. The minimum rent or actual royalty, whichever is higher, remember this, the minimum rent or actual royalty, whichever is higher, whichever is more, is to be paid to the lessor. For example, X leased a mine from Y at a minimum rent of rupees 12,000 per annum. So here merging a royalty of rupees 2 per ton coal raised. So it is a simple formula to make you understand. Clear? So you have to remember this. X leased a mine from Y. So Y is the owner, Y is the lessor. Clear? Whereas X is the lessee. He has leased a particular mine from Mr. Y on a minimum rent of rupees 12,000. So he has to pay 12,000 as a minimum rent every year. Clear? So he has merged a royalty of rupees 2 per ton of coal mined or raised. So whatever, if we produce a per ton coal, he has to pay rupees 2 to the owner. So now, if the quantity raised for the first year amounted to 4,000 tons, so In case he is given, we are going through with a small example. In case in the first year, so we are able to produce only 4,000 tons. So then what would be the circumstances? And in the second year, 8,000 ton. So in this case, X will have to pay rupees 12,000 for first year to Y. So that is minimum rent, because they have agreed a minimum rent, because their production is very less. 4,000 tons, 4,000 into 2, 8,000 rupees. But there is a, under the clause, there is a minimum rent of rupees 12,000. So as per the law, we are going minimum rent or the royalty, whichever is higher, whichever is greater, whichever is more. So 4,000 into 2, 8,000 rupees is the royalty. Minimum rent is 12,000. Which one is higher now? 12,000 is higher, 12,000 is more. Clear? So that 12,000 rupees has to be paid. So that is for the first year. So the minimum rent, since the actual royalty is 8,000, okay, minimum rent will be paid. So if it is less than minimum rent, on the contrary, he will pay rupees 16,000 to Y. So you can look at the second year production. So what is the second year production? 8,000 units, 8,000 tons. So what is the per ton price? 2 rupees. So 8,000 into 2. So that comes to 16,000 rupees. So whereas minimum rent is how much? 12,000. So now compare minimum rent 12,000, actual production 16,000. So which is greater, which is higher, which is more? 16,000 is more. So in such a case, we don't consider minimum rent, we consider only actual royalty as per the agreement. So since actual royalty is 16,000, so that is more than the minimum rent. Okay. So now we always go with the royalty concept for number of years. It cannot be for 1 year or 2 year or 3 year. So by this time, after looking into my explanation, you might have got a doubt by this time. The doubt is very simple. If that shortage, whatever, if we are producing less than the minimum rent, if we get additional time, additional provision, so that we can in future consecutive years we can produce more and we can get more money. So that option is also there. So this kind of adjustment we always show in a short working and short working recovered. So now let us understand what is short working. Short working in a simple sense you can understand. So if the production is lesser than the minimum rent, that is what we call it as a short working. So you can say short working equals actual production minus royalty. So that is nothing but a minimum rent minus actual production. If minimum rent is greater than the actual production, so there is a short working. Clear? So that is what we call it as a short working. Okay. So now let us understand in detail what exactly short working is all about. See, the excess of minimum rent over actual royalty is known as short working. Try to understand in a single line. I have explained, that is the excess of minimum rent over actual royalty is exactly known as short working. Okay. So therefore, question of short working will only arise when the actual royalty is less than the minimum rent. So this always raise when actual royalty is lesser than the minimum rent. That means minimum rent will be more and actual royalty will be lesser. So short working which are recoupable will appear in the asset side of the balance sheet as a current asset. See, the royalty which can be recoverable in future days, so that always should be reflected on the asset side of the balance sheet. See, in the above example, we can say short working for the first year will be rupees 4,000, correct? So 4,000 into 2, 8,000, minimum rent is 12,000. So 12,000 minus 8,000, so short working is 4,000 rupees, correct? So since the actual royalty is less than the minimum rent, but in the second year there will be no such a short working, since actual royalty is more than the minimum rent. So in the second year, so actual royalty is more than the minimum rent. So that is 8,000 tons has been produced at rupees 2. So that is 16,000, whereas minimum rent has been fixed for 12,000. So I believe you have understood what exactly short working. So now let us understand that is a recoupment of short working. That is a recoupment of short working. So what is that a recoupment of short working? See, recoupment of short working is all about recovery of that short working. So usually in a royalty agreement, a further provision is included about the recoupment of short working. So that is, the lessor allows the lessee the right to carry forward and set off the short working against the excess or surplus of royalty over the minimum rent in subsequent year. So if there is any kind of thing, like we always say, if there is a shortage, if minimum rent is more greater and that actual production or unit value is less, so in such a case short working will be there. So that can be recovered easily for given a period. So it might be 3 years, it might be 4 years, it might be 5 years. So in other words, if you understand that, the lessor promises to adjust or return that excess which was charged in the first few years out of excess earned in the later or subsequent years. Clear? So it can be adjusted into the subsequent years. So that provision also is there under royalty account. See, right, you can say that here this kind of right is known as the right of recoupment of short working. So which you will get, so where you can adjust that short working into n number of years. So it can be presented in the following manner. So that is, we have one is fixed, one is fixed and another one is floating. So what is this fixed and how it will be treated, and what is floating and how that is also treated, you have to understand. See, if the lessor or landlord agrees to compensate the losses which were incurred in the first few years, say 3 years or 4 years or 5 years, the same is known as fixed. So that means the specified number of years is clearly given to recover the losses, to recoup the losses. So that kind of system, short working recovery system, we call it as a fixed recoupment system. And whereas floating recoupment system, so if the lessor or landlord agrees to compensate the loss which were incurred in the first few years and in the next or following or subsequent 3 or 4 years, the same is known as floating, as the same can be adjusted in any year if short working arises. So that is, each year's short working will have to be adjusted against the excess royalties earned. So in this subsequent years accordingly. So every short working will be given or adjusted towards the next coming years. So here, as a student, see, be clear with this, as a student, you must remember in this respect that the short workings which are not recovered within the stipulated period should be treated as irrecoverable. If the maximum time given for recovery is over, so then it should be considered as it cannot be recoverable. So that is why irrecoverable, and hence should be transferred to profit and loss account of the year in which the same is elapsed. That means, say for example, 4 years duration has been given to adjust or recoup that particular royalty, but we fail to recoup that within 4 years. So in the 5th year we are supposed to transfer that money into the P&L account. So that is what should be transferred to profit and loss account of the year in which the same is lapsed. Clear? So the recoupable part of short working is shown in the asset side of the balance sheet. You should remember, it is always shown in the asset side of the balance sheet. Provision to be made for short workings. If not, there must be a provision to be provided. So we have already been stated, I have already explained that recoupable short working appears in the asset side of the balance sheet as a current assets on the assumption. So it is clearly on the assumption that the same will be recouped in future, but it is uncertain sometimes its amount of short working due to many factors, although he has got the legal right to recoup. So whenever he is legally has a right, if that lessor has a right legally, so you can do with the law, so then we must pay, so that short working. So from the standpoint of conservatism, a provision should be made for such a short working against profit and loss account. So if it is there, so we must provide the provision for such kind of short working. So in the P&L account, in that particular year when such a short arises, so working appears, it is needless to say that provisions for short working will appear in the liability side of the balance sheet. So whereas a short working that is recoupable will appear in the asset side of the balance sheet. So consequently, unrecoupable or non-recoupable part of the short working will be adjusted against such provisions and not against profit and loss account. So if short working irrecoverable is there, that will be adjusted. So it cannot be transferred to P&L account. So the balance of provision, if any, should be credited to the P&L account. So it should be credited to the P&L account. So now let us understand the relationship between a short working and minimum rent. So because it moves hand to hand, together. So we must know the differences, clear, or the relationship. See, it is we have already explained, I have already explained actual royalty that is calculated on the basis of a fixed rate to the actual royalty. So calculated on the basis of a fixed rate to the total quality is less than the amount of the minimum fixed amount, that is minimum rent. So that is minimum rent, short working, and arises in short working arises only when actual royalty is less than the minimum rent. Okay, so we have a formula for the same, that is short working equals minimum rent. Short working equals minimum rent minus actual royalty, or you can say that minimum rent equals actual royalty plus short working. We can say both the ways, so it is not a big deal. Okay, so it might be a minimum rent minus actual royalty, or it might be actual royalty plus a short working. However, in this case of landlord, the amount minimum rent is equal to actual royalty receivables plus the short workings, etc. So minimum rent, actual royalty, receivable, and short working. So you have to understand this point also. So it must be remembered that the landlord is entitled to get the minimum rent or actual royalties which is higher. So higher part we consider whether it is on the basis of agreement amount or on the basis of, that is minimum rent, or the actual production. Clear? So that will be considered. So that is what we call whichever is higher we consider, that is after adjusting the amount of short working any. Clear? So now you have to understand ground rent. What is this ground rent is all about? See, sometimes the lessee is to pay an additional fixed rent in addition to the minimum rent, which is known as ground rent or surface rent. So additional rent paid by the paid by the additional rent, which is fixed rent. So that minimum rent, so that is what exactly we call it as a surface rent or ground rent. So now let us understand methods of accounting, where there is a clause on minimum rent and recoupment of short working consequently. So we are going to solve the problem on the basis of the following journal entry, so that we can have more understanding about the journal entries. Okay, so let us continue with the journal entries and how the entries should be passed in different circumstances. So let us see, when royalty is less than the minimum rent, when royalty is payable and it is less than the minimum rent, what should be the entry? So very simple, royalty account debtor actual royalty, short working account debtor whatever the difference shortage, to landlord account. So actual royalty and there is a negative difference, so that negative difference we call it as a short working account. So both add and you can transfer it to the landlord account. So next, for the payment to the landlord, so who is receiving the payment? Obviously landlord. From where are we paying? Bank account. So what is the entry? Landlord account debtor to landlord account debtor to bank account. So that is actual royalty we are paying. Okay, actual royalty we are paying. So next, for transferring royalty. So for transferring royalty, so how we are going to pass the entry for transferring the royalty? So that is trading, profit and loss account or manufacturing account or production account debtor, production account debtor to royalty account. So that is going to be the entry. So when short working is recouped, in the case, so there was a short working that has been recovered, so in such a case the entry will be royalty account debtor to short working account. Clear? Royalty account debtor to short working account to landlord account. So if there is a shortage, that has to be transferred to landlord and short working. Okay. So next, for irrecoupable short workings, if that short working cannot be recouped, in such a case what is the entry? The entry is profit and loss account debtor to short working account, profit and loss account debtor to short working account. Okay, so now as a students you must understand, practically when we speak about royalties, that is completely based on the production or output. So which should be debited to the manufacturing or production account, whereas royalty based on sales be treated as selling expenses, and that should be debited to trading account on profit and loss account. So before solving the problem, so by this time you might have got the idea, so what is the royalty account and how it is solved. So before going to that, you must remember the below chart, so which is very important to understand, so which we call it as a memorandum royalty statement, or we might call it as a analytical table also. Clear? We might call it as a analytical table also. Okay, so here we have a column that is year, quantity, then rate per unit, then the royalty, then we have a minimum rent, then we have a short working, then short working recovered, short working not recovered, and transfer to P&L account, and ultimate amount payable to landlord. So this is going to be a chart which we use while we calculating royalty. So without this chart we cannot solve the problem. You should remember, without this chart we cannot solve the problem. So now let us understand by summing up the entire lesson. The landlord is entitled to have the minimum rent. You should remember, the landlord will be eligible to get the minimum rent or actual royalty, whichever is more. So after looking into adjustments, so that is recoupment of short working or any other adjustment is there after that. So if there is no clause in the royalty agreement about the minimum rent, there will neither be any short working or nor any recoupment. So if that price is not given, suppose there is no separate clause has been created for minimum rent, so there will neither be any sort of working that is nor any recoupment. Short working will not be there, or any recoupment of short working will take place. So the short working which is recouped is to be shown as current asset in the asset side of the balance sheet. Clear? So whatever we have recouped, that will be ultimately shown in the balance sheet asset side of the balance sheet. So the recoupable part of short working should be transferred to profit and loss account. So whatever we are supposed to receive which is pending, that should be transferred to P&L account. Okay. So now royalty based on output should be debited to the manufacturing account or production account, and royalty based on sales, so that should be debited to trading account or profit and loss account. So now we have to understand the recognition of royalty as a revenue under Indian standards, accounting standard number 18. See, as per Indian standard, accounting standard 18, revenue recognition, revenue arising from the use by other of enterprise, so recurs as yielding interest. Royalties and dividends should only be recognized when no significance, uncertainty as to measurability or collectability exists. So these revenues are recognized on the following basis. That is, in case of royalty, on the accrual basis in accordance with the terms of the relevant agreement. It becomes clear from the above that royalty receivable should be recognized as a revenue. So royalty receivables always should be recognized as a revenue. So this is what accounting standard 18, which we can understand through Indian accounting standard 18. And I believe in this video you got the clarity of what is royalty accounting, what are all the types of royalty account, and what are all the important concepts that we must know while preparing a royalty account. So now I am ending up this video. So I'll get back to you soon with the accounting for royalty, and next video we are going to solve a problem. So until then, take care, bye bye, see you soon and stay safe.